Economics. This is the definition from Webster's. A social science concerned chiefly with description and analysis of the production, distribution, and consumption of goods and services. So that's simple, but it's also profound. We have determined that really the best way to understand what's going on in the economy is to understand the main driver, the 800-pound gorilla, and that's government. And again, what government policies are expressed in the 4 grand kingdoms. Art Laffer used to say, if it works in an economy of 2, it works. Which his gift is to simplify things. But that was when I first heard that, I went, what? But it's kind of true, like on trade, free trade. Has anybody ever heard of David Ricardo? He wrote a book called Gains from Trade. It's an economics 201 book, sophomore level. It's really extraordinary, and it's a beautiful story about trade and why trade, the free flow of goods and services across national boundaries, is beneficial to all participants. It really is 1 + 1 = 3. I do some things well, but there are things I do less well. CJ does things well, but there are things he does less well. Doesn't it make sense that we trade? I sell him the things I do well, and he sells me the things I do well. It really is 1 + 1 = 3. And of the grand kingdoms, I think it's the least appreciated. But the free flow of goods and services across national boundaries, it's accretive to growth for both parties. And I'll get into that later. We're going to start with fiscal policy because of the Tax Cuts and Jobs Act, which was signed into law in 2016 by President Donald Trump. Oh, let me do a disclaimer. What I say sounds political, and it is, but it's not partisan. My job is to be an umpire. My job is to judge a policy, its incentive effects on behavior and prices, and not to get involved in the drama of politics. You with me? And I will tell you right now, and I know you'll all agree, neither party has a monopoly on bad ideas. In my talk, I will pick on Republicans and Democrats equally. Okay? So that disclaimer's clear, correct? So now I can go forward. Yeah. Fiscal policy, the tax cuts, derided as a tax cut for the rich, because of course it was a corporate tax cut. What did it do to the economy? Where do we stand post the tax cut? Well, it's pretty interesting, and it's actually it's the story of the day. This is median annual wage growth showing that wage gains among the lowest quartile of wage earners, what the BLS, which is the Bureau of Labor Statistics, federal agency, what they call non-supervisory employees, again, the lowest quartile in wage earners, experience the biggest wage gains of all the other cohorts. Almost 5% increase period over period in the most recently reported numbers. More than over 35 years. So when anyone tells you that tax cuts for the rich are for the rich and only the rich, they're not. They do trickle down, to use that pejorative from the Bush era. They made it down to the lowest quartile. The numbers are the numbers. And that's why our consumer economy is actually doing better than anybody expected, despite the trade skirmish. It's because a giant, 70% of our economy is consumer-led. You've got the rich, the 1%, but you've got this big, very large group at the bottom of the triangle, which is your non-supervisory employees, the lowest quartile. There's a lot of them, and when they get an incremental dollar of income, they spend it. And it's been very beneficial to the economy, in fact, carrying the day. It is why we are still above water in regard to GDP growth. And it's obvious in the numbers. Here's just another way to look at the same thing. Wages are growing faster for the low-wage workers. The blue line is the lowest wages. The red line's mid-wage, and the line that's rolling over is high wage, just so you know. Oh, by the way, also, I don't know if you noticed, the stock market's been doing very, very well. So the rich are spending like drunken sailors, and the lowest quartile, they're spending as well. So we have a consumer-led economy that's in decent, surprisingly good shape, again, despite the trade skirmish, which is a problem, and I'll get into it. And this is basically the U.S. versus the world indexes. And we've obviously been outperforming the world. If you look at Europe and Japan, or even in China, their policy mix is not as good as ours. Europe, An example, when I started my business, I went downtown to the Howard office building where I signed, I registered my company and got an EIN, and I was in business in 28 minutes. In business. In France, you can't start a business. It takes like 2 years to get a business license in France. So tell me, how are you going to have a dynamic economy when entrepreneurs can't get a business license for 2 years after having the creative spark to try to go take that risk? Guess what? You don't. And you never will. Their labor rules are so egregious that you can't fire anybody. You cannot fire in France. So who's going to hire? That's why they have mid-teens unemployment. Europe is suffering from a malaise that is so entrenched in their government economic policy mix, mostly regulatory and high tax rates. They're done. I don't see a way out. We're lucky enough still to have some dynamism, not only among our people, which is amazing, but also in our policy mix. It's not the end of the world, although I'll scare the heck out of you at the end. Well, can I tell a little story about a young accountant? We're going to try to have some fun today. Do you mind? I got to go for like 2 hours. So can we have fun together, please? I want to talk about this stuff, but can I have fun? The earliest story I know about an accountant is a friend of mine's young, precocious daughter. They had moved to Nashville from another city, and she had gone to a new school. It was second grade. She comes home from school with her book bag and drops it at the door and runs into the house. And her mother was there for her, arrival. Of course, dying to know how the first day of school went at the new school. So she snuck down the hallway and she heard her daughter in there doing math. She was so pleased. First day, first minute of coming home, and she's in there doing math. And she hears her, going through her lesson out loud. And what she hears is, 1 + 1, that sumbitch is 2. 2 + 2, that sumbitch is 4. And mother crashed and said, Judy, where did you hear this? She goes, Miss Jones at school. Her mother, of course, livid, runs to the phone, sets up an appointment for the teacher and the principal. And when that day comes, she runs into the school, livid, naturally, says, what are you teaching my child? And she said, well, what did you hear? She said, well, she came in, she dropped her book bag, she goes to her room, she starts doing math. I asked her, here's what I hear, 1 + 1, that sumbitch is 2. And the teacher started laughing, of course, which her mother had almost like lost it. Why are you laughing? She said, what I said was 1 + 1, the sum of which is 2. CPAs are precocious. I had to get that out of the way. All right. I didn't get any guffaws, but I got some chortles. I guess we're awake, so I'll march on. There's more of that to come, too, by the way. Regulatory policies. So what this is, you've got tax policy, which is fiscal policy, tax rates, tax credits, depreciation rules, also subsidies. You've got regulatory policy, which is everything else. The millions of regulations, restrictions, and requirements imposed on businesses. It could be building safety requirements or food safety codes, but it's also the Affordable Care Act, so-called. It's also the ethanol mandate, which requires that 10% of every gallon of gasoline contain 10% ethanol, So it's this is the regulatory apparatus, and boy, is it something. So another thing that this president has done is he's pulled back on the regulatory apparatus. He has significantly reduced the regulatory burden on businesses. So I know y'all are focused on tax rates. I'm focused on the whole policy mix. This right here has been very significant to our GDP growth. And I'll go through some anecdotes as to why that is. And by the way, remember, this isn't political, but the last regime, presidents, I referred to Barack Obama, who I like personally very much. I referred to his regime as they had a regulatory jihad. They wanted to regulate everything that moves, wiggles, and crawls in the private sector. And by the way, they're a bunch of lawyers, so I'm not going to blame them. They didn't maybe they didn't know better, but they did it. And I'll go through some details. But this president has done something quite interesting. And in this chart, you can see fewer costly regulations. This is the sum total number of regulations with over $100 million in economic consequence in the real economy. And this comes from a Washington-based government-associated statistical source. Under George W. Bush, remember I said Republicans and Democrats, I think George Bush is a fine man and so is his father, but I got to tell you, they weren't great. They were not great presidents. In my humble opinion, forgive me, Lord, I've sinned for saying that. And I could go through it one-on-one with you why, but it's all economics. That's it. I don't care. If he lets the economy breathe, he's good. Or she. This is interesting. He passed 465 ambitious regulatory initiatives with over $100 million economic consequence. Barack Obama passed 647 of them, and here Trump's done 229. That right there, to me, it pulls back the regulatory blanket, which allows the fires of commerce to burn a little hotter.
Are those all one-term numbers?
Year to date. Ooh, I'll try to go backwards.
Those other two were two-term presidents.
Okay, yeah, so that was just for a short period of time. It's not for the whole terms. He could turn around and destroy everything any minute. I don't trust any politicians. Period, end of story. And by the way, half the time it's their advisors. Federal deregulation has saved an estimated $23 billion in the real economy. Surprisingly, some of it comes from Health and Human Services, HHS, under Alex Azar, former pharmaceutical executive that many people derided. He was going to be a representative of the dirty pharmaceutical companies. But what they've done is they've been very, very creative in their policy mix governing reimbursements, mostly from Medicare and Medicaid. They're actually setting up reimbursement models for an episode of care, which might be a knee replacement, whereby they pay a doctor more, not for doing more surgeries, not for doing more, but actually for doing less. They actually get reimbursed for saving money in an episode of care. And guess what? It's bending the cost curve down. It's incentivized doctors to be stewards of the spend, not profligate spenders. That takes a certain amount of creativity, especially in Washington. They're not geared to be creative or to try anything new. Spend money. Take the safest route and get reelected. That's the palsy. But I got to tell you, I'm impressed. I really am shocked and impressed that government is doing something that I like. Another thing, remember, I'm agnostic. I'm on the front row seat, though, to watch the train wreck that is government economic policies. And I've been forced through my experience to have to study boom-bust cycles in all continents and throughout history. And I've become quite a cynic when it comes to government. Full disclosure. This is an example of regulations gone wild. So this is U.S. field production of oil since 20. You can see that it's upward sloping. You can see that in the 1960s it goes parabolic. And then it just turns on a dime and U.S. oil production goes into a 40-year decline. What caused this 40-year decline was a decision made in Washington by a Republican by the name of Richard Nixon. Remember I told you neither party has a monopoly on bad ideas? Well, here's an example. I'm going to pick on Democrats and Republicans. I'm an equal opportunity critic, okay? In this case, the administration, and by the way, Nixon was reported to have one of the smartest and most intellectual administrations among any in modern history, all right? Reported. They were scared of a broad inflation. And they were scared that oil prices would lift off and bleed through the broad economy. Back then, in the 70s, oil was a much greater input per unit of GDP growth. In other words, we relied on oil a lot more than we do now, currently, right? So it was a major input. And they were worried about a broad inflationary drift, and oil prices were leading the way. And so they, in their infinite wisdom, decided to cap prices. They call them wellhead price controls. They're famous. Go Google it. Nixon enacted wellhead price controls and wage and price controls. I'm sure you've heard of them. Maybe you've not read about them. But here's what they are in reality. Let's pretend that each of you represents an oil company in 1971. Each of you is a CEO of an oil company, production company. Most of you, by the way, were in Texas and some in Alaska, some in Oklahoma. And I'm the president. And I'm worried about a general drift in oil prices leading to an inflationary drift. So I convene all the CEOs, and here we are in this meeting today, and I've got to tell you this. I'm going to cap what you can charge per barrel of oil below the market price, starting today. Okay, that happened. Now, you tell me, what's the incentive to go out and find the incremental barrel of oil and produce it? It's greatly diminished. What happened to oil production? 40-year decline. That happened. That's in the history books. Those numbers are real, legit. One decision. One wise decision, simply, let's cap inflation by capping prices, which incentivizes people not to produce. And oil prices went to all-time highs, setting off a broad inflation. There were other things going on at the time. I don't want to talk about the moving off a gold standard or any of this. This is what it is. So my point is, regulatory decisions like this have significant ramifications for the broad economy. Everybody with me on that? Sound reasonable? Back to trade policy. Again, the free flow of goods and services across national boundaries is good for everyone. It just makes sense. And it's hard to find somebody who's not a free trader. And by the way, this is the one area of Donald Trump. Now, I did not like Donald Trump initially at all, and I still don't like him. Who could? He's a curmudgeon. He can't complete a sentence. He's grimacing all the time. He's not my kind of guy. We would not be friends. Okay. However, I will tell you, I'm surprised and impressed by the policy mix. I'd say he's got very good policy instincts, similar to Ronald Reagan, in the deregulatory aspect, in the tax-cutting aspect, because I believe very much that those types of policies lead to growth, and growth leads to prosperity, and so forth. So, and I know I'm treading lightly here because of the controversial character that he is, so I went ahead and tell you, I don't really like him, but I am kind of impressed so far. Anything could change. Trade policy is something that I reacted very, very aggressively against when I heard tariffs. I'm like, no, because again, it's very accretive. However, of all the policies that he has embarked on, this is the one that both Democrats and Republicans tend to agree on. I have friends in the Silicon Valley. The president at Salesforce.com is a friend. And a lifelong Democrat, by the way, and very intelligent, obviously, Stanford grad. And he says of all the policies, this is the one we're on board with. We have been ripped off for decades by China. They're a bad actor. All our IP is gone. It's unbelievable. We sign our lives away when we go to sell in that market, and everything's stolen. Everyone will agree that the policy idea or standing up to that was not a bad idea. It may have cost the economy, it did, but it's interesting to see that the Democrats agree with this. What bothers me is that why did it take the grimacing Donald Trump to bring this up? If everybody knew it, including some of the smartest, most well-connected Democrats that I know of, why didn't anybody ever address this before? Where were our prior executives? Where was anybody on this topic? Very strange to me, how that worked out. Anyway, here we are. China trade is really collapsed, and they are, very dependent on us. They're now 20% of the global economy, by the way. The last time, we had a trade hiccup, they were only about 7% of the global. Now they're 20, so it's much greater consequence to the well-being of the world, in my opinion. And look, their China exports to the U.S. is down almost 10%. No, almost 20, 15. Oh, it says 16 right there, sorry. China industrial enterprise profit year over year. Profits, down 10% here. So when China posts their GDP growth numbers, or they do their ISM numbers, you know what those are? Institution for Supply Management, their industrial production numbers, and C&B trumpets it, and they talk about it all day long. It's in the Wall Street Journal. It's in the business side of the New York Times, and they say we grew at 6.1% up magically again. It's always within a decimal point, by the way. Here's the news. They're not growing that fast. It's a manufactured number. They're probably in recession. How do I know? These numbers are published. These numbers are profits that are from publicly traded companies that have to publish their numbers and file with the securities authorities. And they're down 10%. China's in recession. Which brings me to this coronavirus. The reason everybody's freaking out about this thing is they cannot trust the purveyor of information. They cannot trust that these numbers are real. And why? Well, there's your answer. We have a history here. And that's why there's so much paranoia about this thing. We're not getting the right numbers, and there's no telling what they are. And I bet they don't even know them. All right. Remember, the tax cuts were accretive to growth, not only to the lowest quartile wage earner, but also to corporate profit margins. And I would argue to the broad economy. Very accretive. The trade skirmish probably reduces, according to this source, 40% of the benefit of the of the tax cuts. Are you with me? So it is weighing on the economy, no doubt about it. But without the tax cuts, we'd probably be in a recession, in my opinion. I think we're probably dangerously close as we speak. So that's trade policy. With me on that? Free trade, free flow of goods and services, accretive to all participants, very important to the well-being of the world, in my opinion. Monetary policy. I'm going to spend the rest of my time on this one. And the reason is because we are in uncharted territory. Because some of the policy initiatives coming from the monetary authorities around the world are unprecedented, and not by a little bit. By hundreds of %. And we don't know the outcome. And I'm about to scare some CPAs. Everybody with me? Take a drink. I'm going to take a drink of my coffee. Get excited. Monetary policy refers to central banks globally. In Europe, it's the ECB, European Central Bank, the Bank of Japan, Bank of China, and our own Federal Reserve, right? They're in charge of the money supply and interest rates. They probably are, second to God, the most powerful force on earth. They certainly think they are. First, I'm going to describe how we got here. This bull market over the last, since the housing crisis, has, I'd say, surprised everyone at the strength of it. We've had a 300% increase in financial assets. By the way, this is widely publicized, but the recovery from the 2009 downturn was the weakest on record from a recession. And okay, that's also just numbers, data. It was the weakest recovery on record from a recession. Period. End of story. How so then, among a sluggish economy over the last decade, did financial assets increase 300%? Oh, the Federal Reserve, I'll tell you how. Gladly. I'm glad you asked. This is, where's my little thing here? Here. Whoa. Sorry, gang. Okay. This is the 2008-09 crisis, and zero interest rate policy, which had never been heretofore practiced, was implemented, which reversed the market declines in March of 2009 and sent the market rallying. So the Fed ran to the rescue of declining financial assets, depression, or whatever they wanted to call it. I would argue they went a little overboard. You might also remember during this period of time, they passed a number of spending measures, by the way, under George Bush, Republican, and Hank Paulson, Secretary of the Treasury. They decided then that they would take $900 billion in new debt and send checks to Joe Sixpack and his wife, $600 to an individual, $1,200 to a family, by the way, for something other than work effort, thinking that if they sent this mailbox money to us, that we would then go out and spend that money. And for every dollar they gave us, it would trickle through the economy and turn into exactly $2.3. That was the math they used. Okay, I saw the vice president's chief economist in a group like this argue for that Keynesian multiplier, they call it, the Keynesian multiplier, that there's a snowball effect, that if you give people money, they'll go spend it and it grows. By the way, it belies logic. And it didn't happen in any way. But they failed to think that the $900 billion in money, remember, they sent this in mailbox money. They gave people $600 for something other than work effort. I would argue there's friction to that. I've got children. I gave them free money. Would I expect them to work? Sorry, pal. I mean, I could develop a welfare state in my own house. Anyway, they did it. It ended up, the dollar was a 0.8. It turns out that Joe Sixpack saved some of it and didn't spend it. It wasn't accretive, but the debt never went away. It was $900 billion in new debt. Put it on that side of the ledger. Again, for something other than work effort. That sounds subtle, but it's profound, in my opinion. There's friction to it.